There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
See my screen. We are on the subject right now of connecting your MT4 platform to MyFX Book. This is actually one of the better videos that I've seen on this. So let's make sure somebody wants to let me know if you guys are seeing this okay, because it looks like I get a couple people saying they're not seeing it. So maybe we're coming through a little better. And I'll redo all that. If we got any questions, we can always come back in and so forth. We're recording now. So I try not to have this thing auto start recording because, you know, it catches a lot of like getting me set up and stuff in the beginning, which is just makes more work for the developers. So today is the 19th of October. Q4 is flying through with lots of volatility in mostly the equity markets. So here is, just so you guys can see this, I just had all of this activated about a week or two ago. So in the news feed, if you have access to all of the groups, okay, so you'd only be subscribed to, you know, one or two in most cases, but I requested access to all the groups. So if you go into the news feed, you're only going to see the news feed for whichever software you're using, right? But we've done, in my opinion, a really good job of trying to get a lot of people to come over and bring over a lot of the developers and just get them off the Telegram platform. So I would say to continue to voice that, because at some point they're going to shut Telegram down and we'll have only the AP social platform. I don't think we're near that, but from a risk management standpoint, it's wise to get everybody migrated over to whichever page that you're using, you know, or whichever group that you're in. So like with the Arrow community as an example, you could see how we're starting to get people to post and more questions to come through. And I think this is just better. If you guys want to tag it with a particular tag, you know, that'll help sort of find it. I tagged mine with trading and risk management so everybody can find it. So just a heads up on what's going on in the AP social community. I spoke with the two owners of Auvoria today in a meeting, and both Chris and Bill expressed a genuine interest to get this whole thing on an app. Apparently this does exist in app form, this particular platform, although we have not seen it demoed. So I think that that would be something good to sort of hope for down the road, since a lot of our subscribers use this on their phones. So it's probably kind of wonky to use this on their phones, but who knows? It could be wrong. I haven't tested it out yet. In any case, that's the story in AP. Let's talk a little about the calendar. And I think that we've got calendar here. I have so many bookmarks these days that get lost. Okay, there we go. You can always filter the calendar out. Get rid of everything but the red folder events, in my opinion. The gray just usually just shows you holidays, if you didn't know. Let's make this larger. There we go. So Tuesday CPI from the GBP. Oh, I did note. Look at this consumer price index number now. Granted, New Zealand's a smaller country, but look at this forecast. By the way, that was the case previous. Look what it came out at. It's damn near double the forecast. So for those of you out there, which really isn't anybody that follows us closely, there's inflation. Period. So take a look at the future news we have tomorrow. This will be certainly quite interesting to see. What's the CPI look like? I guess that's 11 p.m. tonight, right? That's kind of late. So the British are bringing it out real late tonight. It's kind of odd. And then we have the potential for, on Wednesday, more continued inflation, right? So what's this do? Any kind of times that inflation brings up any or supply chain issues, and I think people are probably getting sick of hearing and or seeing inflation and listening to supply chain issues crap from people in the fin media, including myself. But it's really just to keep the risk management alerts high because of the single fact that we're still in a pandemic. We're still running into all kinds of craziness going on with global governments, and people getting shut out of stuff, and shipping lanes getting all clogged up, and it all brings volatility to almost all markets. Surprisingly enough, the volatility has been in other markets. It hasn't been in the currency markets. So if you take a look at, I guess I should just leave this bookmarked. If you take a look at FinViz, go over to futures, look at daily charts, okay? You can see everything that's going on globally from a daily candle perspective, which is really all I care about, is either daily or weekly, right? You can click on daily, weekly, or monthly, whatever. The higher the time frame, typically the stronger the pattern. Not always the case. It's usually the case. And you can look to see, we've had a pretty significant pullback. Notice we came back down in US dollar, and I'm just showing this. Let me see if I can expand this out. Just showing you this in just a generic chart to make it easier. I'm a big correlation and uncorrelation guy, so I like to see a lot of stuff together in short hit format, right? So the dollar came up against a big, the largest area in the last few years, right? And it was completely rejected from that area. So we should see, right, pullbacks in the dollar lead to strength in other areas, right? But the surprising thing is, look at how there's not that strength in gold. It continues to sell off. Look at the weakness in, this is not a surprise, in copper, because obviously the semiconductor thing going on, but there's a weakness in certain areas. Most notably, a pretty significant downtrend in all of these areas. So, as the price of a bond goes down, the yield goes up. It's a seesawing effect. We've just continued to see this sell off between, and we don't really care about the 2-year, obviously, but the 30, 10, and 5-year, these two set mortgage rates typically, okay? Sort of an aggregate of these two typically. So a lot of people want to wire 30-year or 15-year fixed mortgage rates, some of the lowest we've seen. I mean, look at the price of what's going on. So it just continues to sell off. So as the dollar's pulled back, we've seen strength in the euro. This one has been very interesting as I finally started talking about the yen after almost a year of really ignoring it. This is sort of foretelling, in my opinion, the continued weakness that we're starting to see ripple through what is certainly turning out to be a cover-up of the problems going on in China rippling through other markets. But the strength in these two, almost highest of the quarter between these two currencies, is rather interesting. It's almost like these two countries are getting back on track, and so is GBP, but Japan isn't. Now, if there really were truly ripples, in my opinion, of just major issues going on in China, these two countries supply chunks of core natural resources to China, right? Why would their prices be going up? So there's just a lot of cross currents that are really confusing, honestly, and like a lot of correlations have broken between stuff. And but we've seen strength in most of the currencies, with the exception of the yen, in relation to a certain sell-off of the dollar, right? And the vast majority of these are all inside of um, current balance areas. They've been trending sideways in a tight range, with the exception of the yen. So this is broken out, and as it is broken out, which we could certainly see just jumping over to the broader charts, you have to go to a weekly chart on this one just to see what's going on. So I like to start with the long term, right? It really didn't get that much longer term than 2017, beginning first quarter of 17. This is the last time the US dollar had this kind of strength against the yen, right? I mean, not even in the pandemic did it break through. So what's that telling us, right? If we can't read into the tea leaves, certainly I could have gotten it wrong, right? What it can tell us is that things are they're heating up, just like I talked about towards the end of the quarter. What this spills over into, I don't know. I could be wrong. But it's my job essentially to put everybody on alert and keep them away from certain currencies. And the developers do a much better job from a more micro aspect than I do because their software is in tune to it. So all the more reason to tune into, at the very least, your developers' weekly call or watch the recording, right? And at the end, stick around, guys. I'm going to talk a little more about Flash as I'm getting more educated. Even though I was in the beta group, I typically don't take the early pieces of the software and release it on an MT4 and just start messing around with setting. I usually just let everybody else in the group filter all that out, just because I don't want to get caught in the minutia and then just come out at the end. And this is the first time, maybe a little bit of this I did with Variable when Dasan was getting ready to release it, but just let everybody sort of filter through all of the results that come out. And I'll tell you, can't find any holes with the Flash story. I really can't. And I would try and, right? I've been in terrorizing the beta group and, just really putting it to everybody, trying to find the holes in the story, which is typically what I excel at from a research standpoint. And I can't find anything wrong with it, Now, one thing I have, and certainly Dom will talk about this in the Thursday presentation for the Flash announcement, if you guys hadn't seen that. It's all over Telegram and in AP, the Flash meeting via Zoom. It's sort of like an intro. Dom's going to run it. Yakir, the developer from Israel, is going to be on the call. I don't know if he's going to be taking any questions or not, but the key thing is low drawdown, right? This particular EA's been in force for many years. There's been slight tweaks, I think, recently. Getting these things to launch in AP Social and all the coding that goes to the back offices. And it's not like there's some proven roadmap on that, right? It's almost like, we've seen how the track in a MOLA, or seen how the track in any of these racetracks around the world look. We can run our cars around it, and then we go to start up the car and the track's completely different, but yet we can get around the track, right? Doesn't mean we're doing it in a winning fashion, but eventually we'll have all the turns and everything figured out, which is the strangest thing to me. It seems like you could just like a Zapier integration would happen with one piece of software or another, like we use in the financial planning and money management world for our clients. We have an easy integration. It's called Zapier, and you subscribe to it. It seems like you could just be like subscribing to something like this, but integrating each piece of software is like its own unique track build, if you will. Anyway, so I just if we continue to run up, which we certainly could into this area, I think this is going to bring an extra element of pin action to our bowling pin setup. So In this particular case, the pin action could be coming from the center pin, right? Or one of the back row pins and actually affect rows in front of it, right? Which is almost a reverse of what I talk a lot about. Typically, the pin action is the first pin, which is the DXY of the dollar, going after all the other pins, and then there's some other sort of energy that hits other currencies. This, I think, maybe the first time in about a year I'm seeing a reverse current. And I could have a bad read on this, but just be alert. The DXY, just like I talked about, back to daily first. So pullbacks from the big area. It's almost like there should be a it hasn't shown up yet, but it really should be an orange line printing right here, because this definitely is resistance. I mean, we've pulled right back. We've made 2 attempts at it. So now arguably it's time to go back and visit the other side of this zone. It's typically what happens in technical analysis, not always, right? We may spend more time. Who knows? Maybe we're sucking enough shorts in up at the top here, and they're just going to blast it through and zipper out of this whole large consolidation period we've been in for 4 months. 25th of July, is that right? August, September, October. Yeah, shit, even less than 4 months, right? All right, so here's the euro US dollar. Edge of the cliff is that 1.1532 area. So just note that. GBP acting much better than the euro. Now back up completely in the middle of the zone, but edge of the cliff on this one. From a down perspective, which doesn't look like we're going to be going there anytime soon. It could be wrong. 1.3421 inside the zone as well. CAD. Let's take a look at gold. Spot. This one's just got so much muckery going on. I want to move to a weekly chart. But you can see big support right in this whole 1,700 an ounce area, which is also a whole bunch of market profile stuff. Let's see what else. GBP CAD. Let's go back to daily. So as we broke out of this area, still holding the long-term low. Hopefully Neo is recognizing this down here. 1.688-ish area. Oil, very, very high relative to the last few years. Some of the highest we've seen. New highs, if you will, last few years. Let's take a look at the coinage. So this has gone above, and there's probably just been an absolute barbecuing of shorts on the coin here. This is Bitcoin long-term daily. I had said that there was enough shakeouts, and I just didn't understand what was going on from a technical analysis perspective. But there's been a lot of positive developments from the SEC approving ETFs from a futures-based markets. That has brought a lot of energy into this. One thing I will caution is a lot of times when the news event hits, in almost any case, the news has been priced in. It is in many cases when you can hit the sell button and the bell starts ringing that the top's in, at least for now. And you have enough people calling for this to be over 100,000 a coin. But at least from the perspective of regulatory bodies, right, like the SEC, they're one of the more powerful ones on this planet. If they approve your ETF, and it is a futures-based ETF, all that's going to do is allow skeptics like myself, right? And there's a ton of people on this planet in developed markets that feel the same way I do about coins. They don't want to open a Coinbase account, right? They don't want to open a Robinhood account. They don't want to do anything that's just crazy new fintech, right? Because they don't trust it, right? They want their TD Ameritrade or their Schwab or their Fidelity accounts or their E-Trade or interactive brokers, right? Any of the 5 big U.S.-based brokerage firms, at least from a discount perspective, this is the group I view as the 5 biggest. And keep in mind, TD is being absorbed by Schwab, so that's going to leave Charles Schwab, Fidelity, E-Trade, and interactive brokers is the biggest 4 in the discount arena. Some could argue Robinhood, but I don't trust those guys. I think there's just shenanigans going on in there. So with the big brokerage firms, right, you now can buy a Bitcoin ETF, just like you'd buy the spiders or the Qs, right? Does that bring more credibility to it? I think that's part of the reason it's pushed the price up. There's no way I'd be buying this ETF long right now. I'd maybe consider shorting it, although it's probably going to take a few days for them to get that all straightened out. And the options market that's going to be associated with it, which should be an absolutely powerful way to play this, depending on how it plays out. So there's going to be a bunch of ETFs, which is just an exchange traded fund. They're going to be futures based on Bitcoin. When they all hit, how active they trade, to be determined. I don't even have the symbols at this point. I never screw with stuff on day one. I always want to see it play out over a couple of days. So eventually I'll get all those symbols piled in. And we could take a closer look at the ETFs. None of that can trade on the MT4 platform. So you need just a regular brokerage account to do that. And I always recommend, choosing one of the big 4 if you live in the US. If you live in Europe, you can open up an eToro account. Those guys are actually really good. What else? So that's my bitching about the Bitcoinage. Of note, and who knows, this could be a magnetism type of play, but of note, a lot of other coins, they're not breaking out to new highs. Okay. Is there a tea leaf read in any of that? Hard to tell. Typically, if there is not broad participation or what they call breadth among a large group of something in the same sector, right? So if it's biotech stocks in the NASDAQ, one's breaking out, but the rest of the sector is blowing through lower moving averages, then there's no, what they call participation broadly, right? Does that apply to the coins? I don't know. At some point, I'll probably be proven right or wrong on that, but it's another tea leaf that one can pull out and start to pay attention to. Just don't want to talk about here. Go back inside the upper zone. Anybody that has been surprised by the rally, and I don't care if it's S&P 500, the Qs, pay attention to those. Pay a lot less attention to the Dow Jones. You notice I very rarely ever talk about it because it is just 30 stocks and they are price weighted, not weighted by capitalization. Okay, so the pricing of the Dow, in my opinion, is very old school. It's very archaic. I prefer a broader index that is capitalized in terms of the weights of the companies, right? So pullbacks to this area, this whole 4260, or if you want to look at the actual index itself, pullbacks into this 4300 area where we have big support long term. We made 3 cracks at it and then gapped up, came back down to suck in a few more shorts and then ripped their face off with what is now 4 days of a one-time framing higher, right? Arguably, it can't be the same here, but we have higher highs, higher lows. Not yesterday, but most of the days. That's a pretty powerful move, right? I mean, if you're waiting to now to take off your shorts, you're a fool, right? It should have been done here lower once we blew through and held this line. Because I've seen a lot of people inside the arrow room that are doing a really good job of taking the bag trades on this, or what they call the US 30. I'm not really a fan of trading. I'd rather be trading the Qs or the spiders on the MT4 using the software, because the concept's the same. I mean, Nate's bots are looking for the same stuff, right? But I still think I see just way too many people in the room that just don't understand what's going on in just the big picture of these markets. That's why I'm trying to touch more upon them. The Qs looks in pretty much the same shape. We were one time framing up for 2 days, and we stalled out, and now we're up again. Hope we get some pretty big resistance up here. So I think we probably have some digestion to continue on through this week. And the only caveat to that being wrong is if some of these corporate earnings really just come in bang up. I'm talking the big names, right? So just put the big five in the vaccine arena aside and look at the earnings for everything else. Let's see what else. That's pretty much everything I'm seeing as far as the futures markets. Here is, so Flash is Thursday. Dom, he's a really good guy. He's Eastern Europe. He's sort of leads a bunch of big teams over there for Auvoria. He's got a really good pitch deck set up. I just went through the whole thing for Thursday's launch of Flash, and this is LQDFX, so this is one of the better brokers globally. It doesn't have a lot of shenanigans going on with A versus B booking. These guys are more of a straight-through processor. In any case, this is a real account. It's run with standard settings from the start. So that's GBP USD, USD CAD, Euro USD. So it's some of the big ones. This can be put with a whole mess of currencies on. I'll let Dom talk about that. But standard from the start essentially is trailing target profit 3-to-1. This is essentially 0.01 lot size, right? So I'll just leave it at that and let the presentation cover the rest of that. But I think they're going to show some aggressive settings. Just understand that those aggressive settings, the drawdown is about 5 times what you see here, right? Not necessarily palatable for somebody that is putting real capital to work on a larger perspective, right? So I can make this a little larger. There you go. But the key thing with that link I posted in is getting these double check marks, making sure everything's all dialed in, and it obviously allows you to go in and look at stuff like this, okay? These are really good win rates. Arguably not enough data, right, to make this sort of a solid number, but I mean the profit, certainly the drawdown, which is the number one risk metric you want to look at. The other cool thing is when this software gets into drawdown, it pulls out rather quick. So it's almost like it goes into double time trying to get out of drawdown. But, been very conservative. So it has good months. It has okay months. A lot of people are like, 8.5 is only okay. Yeah, it's actually fantastic in investment management land. Imagine if you could even do 2% a month every month on a client's $1 million. And since you're doing 24% a year on their money with a 12.48% drawdown. If you had that type of track record over a long time, like Stevie Cohen's had, Paul Tudor Jones, some of these big hedge fund guys have had, you'd be having billions pour in the door, right? And then you have a question of whether or not you could scale up this through trading millions or billions of dollars. That's completely a different story, obviously, but it's a little more difficult in this arena to scale something like that up in size. But good stuff. So get everybody to tune in, and hopefully those guys will knock it out of the park on Thursday. That's all I have for this week, folks. Everybody have a great week. May the trades be with you.